Oh, hey everyone, it's Coach Chris coming at you today, and I just wanted to do a little update video. I apologize I haven't been posting more regularly. Hopefully I'll get back to it, but been super busy. My daughter's been active in softball, and I bought a house, sold a house, and a lot of other family stuff going on. So what I wanted to, I just happened to be looking at this today, and what I have up on my chart here, it's a 12-month chart of the NASDAQ NQ futures contract. And I just wanted to make a couple of quick observations. If you've been struggling with your trading this year, you're not alone. The volatility that we have seen so far this year is literally unprecedented. Granted, we had a lot of volatility the year of COVID, um, due to the COVID-19 virus that affected the country, but it was kind of short lived, and it was after it was over, it was kind of more predictable than what we're seeing right now. And I guess that's the big thing that's happening is the market really doesn't know how to react yet to all of the different economic news that we've been bestowed upon us since the presidential election last November. And I had thought by now things would have settled down, but they really haven't. Now, it's not all bad. I'll get around to that. The bad part of the extreme volatility is because of its unpredictability and the fact that it can happen at any time, not even when when a news event or a scheduled event is happening, like with an FOMC meeting, we know that on that day, during the announcement, after the announcement, and then at the press conference, we know there's going to be extended volatility for that period of time. Where with what we're seeing now is a tweet or a statement by our president. We can see an immediate reaction, and what we'll normally see, like any event, is we'll see the reaction in both directions. You get the initial overreaction, which can be either positive or negative. And then after that gets processed, then we'll usually see a retracement or a continuation of some time where, like on Friday, there was two or three times where we saw 100 plus candles, 100 plus 1 minute candles, not during any scheduled news events. And so if you're in the middle of a trade, you better hope you're going in the right direction, or you're going to get smoked, especially if you have size on. And because of the way that the reaction is it really doesn't matter if you're trading in the right direction or not, because it will spike up and then sweep liquidity to the opposite side so quickly, you literally get smoked. But what I thought was very interesting with this chart, and for those of you that haven't looked at this, so this is, as I said, this is the yearly chart. So far, and I just put this box up here as a reference point, and I also have this bar chart. This is a little indicator I just created. This chart indicates the overall size of the movement for that candle, including the wicks. So you'll see so far this year, this is the current year candle. In what is it, in the first 5 months, we've already literally had as much volatility this year, up and down, as we have in each of the last in each of the last 5 years. So you have all of that volatility condensed into that 5 month period, which is insane, especially considering that is like 6,000 points worth of volume, and so also, if you look back historically, look at the size of some of these candles. I mean, these candles, this is the 1,000 point line right here. You'll notice that for 10, 15 years, we never got more than 1,000 points worth of movement in an entire year. And then here's 2,000. So the majority of the time that the NASDAQ has been in existence, it's traveled less than 2,000 points. Okay, and then you can see here how the volatility started to expand. If I move this box down there, you'll see we had this year, it showed an expansion, maybe 2,000 points. This was a doji, which was year 18. That was a financial crisis year, I believe, and it's showing red, but it really hard to say. And then you can see how we started to expand starting in 19 and 20, and it started to expand. Did we get up to 5,000 points this year? No. Looks like to be about a little over 4,000. And then we had the COVID year and a year after. And then the last 2 years, like I say, have so far been almost identical in the amount of variance from bottom. What is it, like a little over almost 6,000 points already this year. And the fact of the matter is I anticipate this to continue. There's nothing in my eyes that I can see that this is going to stop anytime soon, especially based on the Fed not changing rates last week. The only thing that I would have thought, like last week, let's say the Fed did do an emergency rate cut. I think we would have saw this expand to the upside because I think people, they're not really counting on it, but they'd like to see it. I think right now, based on what I'm seeing, is with all this uncertainty, the economy is really shrinking. Also, inflation, whether they want to say it's increasing or not, I don't know. All I can tell you is that I know people are struggling, and it's due primarily to housing. Housing costs are outrageous. Like I said, I bought and sold a house last year, or I just sold the house I owned, and I had bought the house I'm living in prior to that. But I mean, it's insane. I don't know how people on a fixed income can live because the housing costs are eating up so much of a person's or a family's income. It's insane. And I'm not talking about luxurious. I'm talking about in a lot of areas, like in the area I live in, an average apartment, which is like a 2-bedroom, no garage, is like $1,500 a month. Well, I mean, that's a lot of money because that doesn't include utilities. Now utilities are much more expensive also. I mean, cable alone, that's going to be $200. Cable and internet, $200. You got cell phone, that's $200. You got a car payment, which we know how expensive cars are. That can be $300 to $500 easily. And then you talk about food and groceries. I mean, I went to the grocery store last week, and I didn't buy anything extravagant. I bought, staples, let's just call, and 2 bags of groceries was $40. In the past, that was $10, 5 years ago, so everybody's getting hit in the pocketbook, and wages have not kept up. Wages have increased, but they have not crept up at the rate that our expenses have increased, and there's no end in sight to that, and I don't see anything changing that. And people can only work so much. It's not like that you can go out and all of a sudden work twice as hard and make twice as much money. The world just doesn't work that way. Because in fact, a lot of people already, if they're in the service industry, were having to work 2 or 1 full-time and 1 part-time job just to make ends meet. So my personal feeling is, I think we will probably see the volatility continue, and whether it's going to expand to the upside possibly, or to the downside even, we don't know yet. There's a lot of uncertainty, as I said, and things that could happen between now and the end of the year that could really surprise us. And so, because I'm a day trader primarily, I'm not going to make any predictions whatsoever because I think it would be counterintuitive and quite frankly useless to try and make any predictions on whether this thing's going higher or lower. I think probably until we get some concrete evidence to know what impact the tariffs are really going to have longer term on the business environment, and B, what the Fed is actually going to do with interest rates, I kind of see us trading within this 5,000 point range up and down, until we see some concrete evidence, whether it's either good or bad. But you can see historically, look how little these bars are compared to those. So as a day trader, this volatility is actually good if you are using proper risk management techniques. Because, like I said, you have to really size your positions accordingly, knowing that at any time, whether it's a tweet, a news announcement, or whatever, that you could actually see almost an instant 100 to 300 point move. And literally, if you're oversized, you're going to get smoked, whether it's your own personal account or whether you're trading a prop firm. It doesn't really matter. So I just thought this video might be helpful to some of you that say are new to trading and don't realize the history of what we've seen in the past and just how much volatility we have actually seen this year. Remember, the election actually happened back here in 2024, and the primary driving force here was the Trump announcement of the tariffs. And that's why we've seen this huge range, and the market hasn't absorbed this completely. So, just stay nimble and always stay on your toes, hone your strategy, and be happy with locking in profits at probably a much lower rate than you did last year or previous. If you have a decent profit, always consider protecting that in any way you can. So hopefully, I'm working on a lot of really cool stuff. I've been in the lab really deep diving into a lot of interesting strategies. Nothing that I want to reveal right today, but it could be either later this week, possibly even next week. But I'm seeing some success with some strategies, and been doing a lot of extensive back testing and forward, not so much forward testing, but trading it on a day-to-day basis and liking what I'm seeing. So thanks a lot, guys, for watching. I hope you found the video worthwhile. Please like and subscribe if you feel so inclined. And also, sorry about that. I was just trying to notice something, how these 4, 5, 6 candles are literally, pretty much in a grouping here these last 5 or 6 years. So, okay, guys, hope that's helpful. Talk to you soon. Coach Chris out.